Yeah, the indecision of the 14 member nations of the Organization of the Petroleum Exporting Countries on Thursday is no longer news. What is new, or the consideration is, hold on a second, where do we go from here? Let's get a sense of this from Nigeria's, the Chief Executive Officer of Nigeria's only oil exploration and production company listed both in London and Lagos Stock Exchanges. Austin Avuru is joining us via Skype right now on the program. Let's have a short conversation with Mr. Avuru. Thank you very much. Good afternoon. We appreciate your coming through on the program, sir. Okay, let's get started. Now, in terms of this decision or indecision yesterday by OPEC, give us a sense of what you made out of yesterday's discussions in Vienna.
I think the OPEC expectations from OPEC in terms of volume injection into the global market was really to put a measurable cap on what OPEC can inject into the market in order not to worsen the glut situation. But otherwise, if you look at it from a global point of view, the impact of the low oil prices in the past 18 months have already had the impact of gradually mopping up the glut that exists. And that's why you're seeing this inching up of the price. I think the expectation is that by the end of 2017, you will not only have mopped up the 2 million barrels a day glut that existed prior to the end of 2014, you will actually get to a point of supply-demand balance that will arrive at an equilibrium price as we have always predicted. So really the OPEC situation was simply to reach a point not to worsen the glut, but otherwise with or without that agreement that OPEC was expected to reach, we think that the overall reduction in production arising from the low prices over the last 18 months are already beginning to have the impact that was expected on global prices.
Mr. Avuru, for those of you who are chief executives of oil production companies in exploration, sitting down in your various offices, watching what's going on in Vienna, how does it all affect you?
Well, what we want is some kind of certainty in terms of global production. If you have some certainty in terms of global production, then you can make projections with the demand, the demand curves that we have. You can then make sensible projections for pricing that will go into your budget and work program planning year on year. It is, to that extent that we would really be happier if OPEC members can reach a consensus on the kind of volume they'll pump into the market.
In terms of reality, where does it leave you right now?
In terms of reality, we still make projections for, $40, $45 for 2016 and $45, $50 for 2017. And we'll be heading to 2018 before we'll be making projections for $60 oil, from a budget point of view. Those are the projections we use for budgeting currently.
Looking at Nigeria specifically, what are the issues that concern you about where we are right now, whether it is output or price and other headwinds in your sector?
I think the biggest problem everybody panics about today is output, because of course the price, whether it stays at $40 or it goes to 60, becomes meaningless if you don't produce. So the biggest issue today is to bring stability to the Niger Delta so that output can be guaranteed, and then we can worry about price, make our projections and planning based on based on a stable output that we can bank on.
Since we've had this very topsy-turvy situation over some time, how are you adjusting to the new reality out there in the world of crude oil?
We can adjust to the reality of prices. We've seen this before. We can make those adjustments both in our work program and in our budgets. What we don't want to adjust to is instability in the Niger Delta. So we are satisfied that government has made a commitment to address the issues and bring stability to the region as quickly as possible. That's really what all of us want right now.
Stability, stability, and more stability. Thank you very much, Mr. Austin Avuru, Managing Director, Chief Executive Officer at Seplat Petroleum, listed in Lagos and London Stock Exchange. So we thank you very much for your time today, weighing in on this very important conversation in the current business week. Brent oil prices were held around $50 a barrel today following an OPEC meeting that failed to agree on output targets, but which was seen as supportive as Saudi Arabia pledged not to flood the market with more fuel. The Organization of the Petroleum Exporting Countries failed to agree to a clear oil output strategy on Thursday, as you have already heard, as Iran insisted on raising production to regain market share lost during decades of sanctions, which were lifted in January 2016. As a result, international Brent crude futures hit around $50 a barrel in early Friday, trading $49.99 a barrel, down about 5 cents from the last settlement, and almost double its January lows. U.S. West Texas Intermediate crude futures trading 9 cents, down at $49.08. Let's stick with the world of energy. Tanzania's energy regulator has raised maximum retail prices on fuel, citing higher international crude oil and refined product prices, a move expected to exert upward pressure on the country's inflation. Fuel prices have a big effect on the inflation rate in the East African country, which slowed to 5.1% year-on-year last month from 5.4% previously. The Energy and Water Utilities Regulatory Authority raised the retail price of petrol by 4.49% and the price of diesel by 1.95%. Maximum kerosene prices were raised 1.84% in the latest monthly price caps, which take immediate effect. In South Africa, Standard & Poor's says, well, probably will not cut the country's credit rating into junk territory, but the S&P may warn that any signs of political upheaval undermining economic policy could trigger a downgrade later in 2016. That's according to some economic analysts. S&P, which rates the sovereign debt of Africa's most industrialized country one notch above speculative grade at BBB- with a negative outlook, has previously warned that a weak economic outlook also poses a risk to South Africa's rating. S&P is due to announce the results of its latest review on Friday, following meetings with policymakers in Pretoria. Okay, let's take a break. When we come back, we'll talk about the deadly disease hurting Nigeria's tomato. You want to fry some eggs, you need tomato, but you got to watch what you put in the fry pan. Watch this after the break.